So how do they determine if you're eligible for financial aid? Well, there's a very simple equation here. COA minus EFC equals financial need. And what some of those mean are, COA is actually cost of attendance. So we're starting with the actual cost of attending the university. And we're taking out that EFC, which stands for expected family contribution. Now this number is based on what you give them with the FAFSA form. Every university has a different equation to determine this, but basically it's the amount that the school determines you are responsible to pay. So again, cost of attendance of the university minus what should be available to you to pay equals your remaining financial need. Now our goal here is really to show you how to maximize that financial need, thus maximizing your financial aid package. So basically the way we do that is two steps. One is we lower that expected family contribution. So if it looks like you really aren't able to pay as much, then they're actually going to provide more for you. The second thing we do is we look at the different schools you're applying to and determine which one of those schools will give you the most of that remaining financial need and help you out. Now here's an example of a family who took Controll. So here's the situation. Their adjusted gross income is $75,000. There's two kinds of assets here. You have your non-assessed investments, and then you have your assessed investments. Now, non-assessed investments are illiquid investments, so it's mainly retirement money. And your assessed investments includes any investments you might have on the non-qualified side, such as a checking account, savings account, CDs, bonds, anything like that. There's 4 people in this family. They have one student going to this particular school. So according to those numbers, you plug those in, their expected family contribution is going to be $20,467. Now, after going through the program, the same income, $75,000, their non-assessed investments go up to $70,400. The assessed investments down to $49,600, and that's the key, really. All we're doing is kind of rearranging some assets on your balance sheet. All other variables are the same. EFC is cut in half, down to $10,646, and again, that expected family contribution is the amount that the college determines you are responsible for. And you can see here, $9,800 more in financial aid, that's per year. And keep in mind, that's per college student. So that adds up to $40,000 a year over 4 years, just because they took the time to understand the process and they took action. Now here's step 2. Now we're going to look at some of the different schools, because there's a lot of people think Oberlin University costs $50,000 per year. Well, a lot of parents say right off the bat, don't apply there, we can't afford it. Apply to a school like Ohio University. Not as good of an education, but it's only $18,000 a year. So this is a separate example now. Say the family's expected family contribution is $5,000. After going through the program, that's what we can get it down to. So you take your cost of attendance on the Oberlin side is $50,000 minus the expected family contribution of $5,000, giving you a remaining need of $45,000. Now Oberlin is going to meet 100% of that need. On the other side, Ohio University, start with the cost of $18,000, subtract out the $5,000 for your expected family contribution. That gives you a need of only $13,000. So Ohio University is cheaper, right? Wrong. Ohio University only meets 58% of your need. What does that mean? Bottom line, total cost to go to Oberlin was your expected family contribution, $5,000. Ohio University, twice as much, $10,000.